No one can predict with certainty whether Bitcoin will increase or decrease in value in the upcoming days, weeks, months, or years. Nevertheless, a method to speculate on potential future price fluctuations is to analyze BTC's past price movements. If Bitcoin continues to experience the same rate of appreciation in its average annual returns, it is projected to reach $98,700 by January 2025 and surpass $100,000 in February of the same year. Some experts are even more optimistic about Bitcoin's potential for value growth. Frank Holmes, the executive chairman of Hive Digital Technologies, a data center builder and operator, suggests we could potentially witness its price doubling over the next 12 months to quadruple. Matt Hugin, the chief investment officer at Bitwise, also anticipates significant price increases for Bitcoin this year. He asserts, "We believe Bitcoin is in a multi-year bull market and is likely to establish new all-time highs within this year." However, it is essential to recognize that this is a simplified overview of Bitcoin's potential price movements. Cryptocurrency is renowned for its high volatility, and during the decade with a 135% annualized return, there were instances where Bitcoin lost more than half of its value in a short period, taking months or even years to recover to previous highs. Why might the price of Bitcoin rise? There are a handful of developments that could cause a rise in Bitcoin's price. On January 10th, the U.S. Securities and Exchange Commission approved the first spot Bitcoin ETFs. The approval of those new ETFs allows providers to create ETFs that directly purchase and hold Bitcoin on behalf of investors. That allows investors to trade BTC at its current or spot price. Previously, ETFs could only trade Bitcoin futures contracts. Futures are complex derivatives instruments appropriate for trading only by experienced investors. Many investors believe spot ETF approval could increase Bitcoin's accessibility as an investment and draw in investors who did not own Bitcoin, simply due to the complexity of buying crypto. The Bitcoin halving. In the context of BTC's supply, another crucial factor is about to come into play. Bitcoin is on the brink of undergoing another halving. The operation of Bitcoin involves a decentralized network of computers dedicated to validating transactions, often referred to as mining Bitcoin. When a block of transactions is successfully validated by solving the correct cryptographic puzzle, the miner responsible receives a reward in the form of new Bitcoin. There is a fixed cap of 21 million Bitcoins that will ever be produced, and periodically, the amount of Bitcoin rewarded for validating a block undergoes a halving. The exact date of the next halving is not predetermined. It depends on the number of blocks validated. However, estimates suggest that the next halving is likely to occur in May 2024. The halving event will result in a reduction in the supply of new Bitcoin entering the market. Historical data indicates that halving events have consistently led to increased trade volume and heightened demand for Bitcoin. Should you invest in Bitcoin? Given its historical returns, Bitcoin could present an attractive investment opportunity. Recent developments, such as the introduction and sale of spot Bitcoin ETFs, make it easier than ever for investors to include the cryptocurrency in their portfolios. For some, the potential for diversification and returns outweighs the associated risks. According to Holmes, Bitcoin, akin to gold, can be an appealing option for investors looking to diversify their portfolio assets. He notes a Bloomberg study from last summer, where over 600 investors were surveyed about their preferences in case of the U.S. hitting the debt ceiling and defaulting on its obligations. Bitcoin ranked third on the list, following gold and treasuries. It's essential to bear in mind, however, that cryptocurrencies come with significant risks. Despite Bitcoin's more than 15 years of existence, it remains a relatively young asset class.